Welcome to the Training and Advisory Services online course. In this course, we will cover the IPSAS International Public Sector Accounting Standards Introduction and the Conceptual Framework. The following is what we will cover in this course: an overview of IPSAS, standard setting process, mandatory and non-mandatory guidance, and then in part 2, we will look at the Conceptual Framework as well as who should apply IPSAS. As TAS, we assist entities in leading through change by conducting trainings where we equip the entity with the necessary know-how on accounting under IPSAS. Under implementation support, we offer a gap analysis which will be done, after which an implementation roadmap tailored for your specific entity will be structured and followed. We also offer online short courses such as this one, which can assist you to know what IPSAS is and can also serve as refreshers. Why IPSAS? We're going to look at some pointers on the reasons that brought about international public sector accounting standards. Transparency and accountability. As the economy is going through turbulence, high-quality accounting and financial reporting standards are vitally needed in the public sector to enhance transparency and accountability. There has also been a demand for timely information. Citizens, parliament, and other interest groups are increasingly demanding timely, reliable, and detailed information. Dependency on capital markets. As public sector entities look forward to raise financing for different developmental projects, investors and lenders are not satisfied when provided with only cash information. They want a broader range of data, hence IPSAS. In terms of robust financial management systems, financier and donor organizations are urging their beneficiaries to implement robust and sound public financial management systems. IPSAS are the only globally accepted set of standards for the public sector. IPSAS takes two types: the accrual basis IPSAS as well as the cash basis IPSAS. The accrual basis, it prescribes the manner in which general purpose financial reports should be presented under the accrual basis of accounting. It focuses on revenue, cost, assets, liabilities, and equity instead of cash flow only. Most IPSAS are on the accrual basis, which is in line with IFRS. On the cash basis type, it prescribes the manner in which general purpose financial reports should be presented under the cash basis of accounting. It focuses on financial reporting of cash receipts, payments, and balances under the cash basis of accounting. Benefits of IPSAS. A lot of these benefits are achieved as a result of the makeup of IPSAS. For instance, presentation of budget information as well as concepts tailor-made for the public sector. As a result, IPSAS provide the following benefits for public sector entities: accountability, consistency, governance, transparency, comparability, as well as quality of financial reports. In terms of standard setting, the IPSAS board holds a consultation process where stakeholders are engaged. After that process, exposure drafts are issued and stakeholders send in their comments based on the issued exposure drafts. An IPSAS standard is then issued after having considered stakeholders and the comments that they would have made, which helps ensure that the standards that are set are of a high quality. Importantly is the transaction neutral approach. In developing standards, IPSAS considers whether a matter has been previously considered under IFRS. Many IPSAS are therefore based on IPSAS. The transaction neutral approach states that similar transactions should be treated the same regardless of whether they are done in the public or private sector. An example would be the determination of costs of a motor vehicle, which would be the same regardless of whether it is a public sector entity or private sector entity. Mandatory and non-mandatory guidance. In terms of mandatory guidance, we have the IPSAS, which are standards which set out the recognition, measurement, presentation, and disclosure requirements relating to transactions and events reported in general purpose financial reports. They were first issued in May 2000 and currently there are 40 standards. An entity is required to comply with all the IPSAS in order to be said to be IPSAS compliant. For non-mandatory guidelines, we have the RPGs, the Recommended Practice Guidelines. They are a relatively new publication that provides guidance on the broader aspects of financial reporting outside the financial statements. They were firstly issued in July 2013 and currently there are 3. RPGs are not mandatory, but they provide good practice guidelines. An entity can be IPSAS compliant without applying the RPGs. And finally, each of the 40 IPSAS is structured in the following manner. It has objectives, scope, definitions, main body, effective date, appendices, as well as a comparison with the relevant IFRS. I look forward to meeting with you in part 2. Thank you for your time.